Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. If you have questions or topics that you wish to discuss, please chat those over as we're happy to go through questions or topics, whether on this topic or other off-topic issues. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Today's topic is $70,000 mega backdoor Roth at Robinhood, how to get 1% match and $1,500 solo 401k tax credits. So we're going to go over the power of the solo 401k and who qualifies, how the $70,000 mega backdoor Roth works, the $1,500 solo 401k tax credit for solopreneurs, and what the Robinhood 1% match really applies to. So again, if there's questions or topics, don't hesitate to chat it over. If you're finding this to be helpful, please like this video. It's going to help us get the word out to others like you. Please subscribe as we go live every day. You'll get notifications of when you go live. You can jump on and hear what we came to discuss, as well as any other questions or topics that you want to discuss. So let's dive in, starting out with solo 401k eligibility. So a solo 401k is for an owner-only business with no full-time W-2 employees. So think like an independent contractor, maybe a solo practicing professional like an attorney or a realtor or a CPA. The key is that the individual is reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. So a spouse that's working in the business can participate, but the individual can't have other non-owner, non-spouse, full-time W-2 employees working for any business owned by that person or a spouse, if any. In terms of some of the top solo 401k eligibility considerations, one is, do I need a separate entity? The answer is no. We have many individuals, for example, who operate via a sole proprietorship without a formal legal entity. And that's fine, as long as they're reporting earned self-employment income. So you do need to report that. That could be reported on Schedule C. For example, if your business is taxed as a sole proprietorship, maybe a single member LLC taxed as a disregarded entity. Earned self-employment income can also be W-2 wages. For example, if your business is taxed as an S Corp or a C Corp. Lastly, earned self-employment income would be income reported on line 14 of a K-1 in the instance of a self-employed business that is taxed as a partnership, filing Form 1065. There's no minimum amount of earned self-employment income that the individual needs in order to be eligible to set up a solo 401k. You can participate along with your spouse or business partner as long as your spouse or business partner is also working in the business and reporting their own earned self-employment income. You can have a solo 401k even if you have a W-2 job, a day job. Again, as long as you've got that side self-employment income. You can even participate in your W-2 employer-sponsored plan and be able to set up a solo 401k for your side hustle. So now that we've laid the foundation in terms of solo 401k eligibility, let's build on that and talk about how someone who's eligible to set up a solo 401k could set up a solo 401k like the one offered by My Solo 401k Financial that's going to allow them to make mega backdoor Roth contributions, and how that could potentially allow someone to contribute up to $70,000 for 2025 and then transfer those funds over to a Roth IRA, including a Roth IRA at Robinhood. So the benefits of a mega backdoor Roth solo 401k is that it allows for much higher contributions. For example, all the way up to $70,000 or even more if you're age 50 or older for 2025. And like any Roth contribution, the benefit is not that you take a tax deduction now like you would if you're making a pre-tax contribution. Instead, when you make a Roth contribution or a mega backdoor Roth contribution, it's made on an after-tax basis, so it doesn't reduce your income now for the year for which you make the contribution, but ultimately the funds end up in a Roth account where you've got the potential for tax-free growth. So the gains that you make or I should say the gains on the funds that are in the account could potentially grow tax-free. In other words, when you ultimately withdraw the money, if you withdraw it as a qualified Roth distribution, you'll be able to take all the gains out totally tax-free. So this key is to, number one, qualify. And we talked about how that means you're self-employed with no full-time, non-owner, non-spouse, W-2 employees, and then setting up a plan like the one offered by my solo 401k financial that allows for voluntary after-tax contributions and then in-service transfers, either to a Roth solo 401k or a Roth IRA, which our plan does. So it's going to be a two-step process. The individual first makes a voluntary after-tax contribution to the solo 401k, then transfers those voluntary after-tax funds out of the plan to a Roth IRA, including a Roth IRA at Robinhood. Now, you also want to work with a provider like us, like my solo 401k financial, that has deep experience in helping customers. Number one, make the contributions to the applicable accounts. In other words, you need to have separate accounts for pre-tax, Roth, and voluntary after-tax funds, as well as providing the ongoing compliance support. Because even though that first step, when you make the contribution, doesn't need to be reported on the personal or business tax return, when you later move it from the voluntary after-tax solo 401k account to the Roth IRA or a Roth solo 401k, in either case, that does need to be reported on the Form 1099-R. And we handle that 1099-R as an optional free service for our customers. In other words, no additional charge. They just have to let us know, provide us the information in a timely fashion, which we make it easy to do because we have online forms for customers to give us that information that we need to prepare the 1099-R. Now, the steps to convert to a Roth IRA at Robinhood are laid out here. Number one, open a voluntary after-tax solo 401k sub-account. Again, you need to have a separate account for voluntary after-tax funds. Make the voluntary after-tax contributions. So deposit those voluntary after-tax contributions into that after-tax account. Step two, convert to a Roth IRA. So transfer the funds from the voluntary after-tax account to a Roth IRA, including a Roth IRA at Robinhood. Step three, provide us the information we need to prepare that 1099-R, which again, we handle as an optional free service. In other words, no additional charge for our customers. Now, there is a deadline to make the contribution. The first step needs to be contributed by the business tax return deadline, including any timely filed extension. There is no deadline to transfer the money, though, to the Roth IRA, although most will want to transfer it shortly after the contribution so that they can start accruing gains on a potentially tax-free basis. So, for example, there's many clients who are still making 2024 contributions, right? Because the deadline is the business tax return deadline, including any timely filed extension. So if their business is taxed as an S Corp and they filed a timely extension for their 1120S, their 2024 contribution deadline is September 15th of 2025, which necessarily means if they make that contribution in 2025 to the after-tax account, it's not going to be transferred out of the after-tax account to a Roth IRA until 2025. So that transfer from the after-tax solo 401k account to the Roth IRA is reportable on a 2025 1099-R to be issued in 2026. Here's a visual example of how it might work. Here we have a one participant solo 401k, so it's just one person. They have two accounts for their solo 401k, one for pre-tax funds, a second for after-tax funds. So again, they first deposit the after-tax contribution into the after-tax account before it gets moved out to the Roth IRA, including a Roth IRA at Robinhood. So now that brings us to the 1% Robinhood match. So this is a promotion that Robinhood offers. Per the information on Robinhood's website, the Robinhood match applies to IRA rollovers. In other words, funds transferred from a 401k to an IRA at Robinhood, including from a solo 401k to your Roth IRA at Robinhood. Robinhood's offering a 1% match on those transfers. So if someone makes a $70,000 voluntary after-tax contribution to their solo 401k for 2025, and then transfers the funds to the Roth IRA at Robinhood, now they will receive, per the Robinhood website, $700 as a match from Robinhood deposited into that Roth IRA account. That's not going to be considered a contribution, right? It's akin to earning interest or a return on your money. So it's not going to be considered a contribution. It doesn't count towards the contribution limits. Now, you would want to verify and review those terms. For example, Robinhood will require you to keep the money in that account for a certain period of time before you can take it all out without Robinhood clawing back some of the money. So in other words, if people take out the money too soon, say after a couple of years, they may charge a fee for doing that. Now let's go to the $1,500 solo 401k tax credit. And before we do that, we'll just respond to this quick question. So if you go to mysolo401k.net/book, please use that link to book a call. I know we responded earlier to you today, and we also included the link in that response. So please also check your email. Thank you so much for jumping on and bringing your good question. So now let's go back to the slides, and let's talk about the $1,500 solo 401k tax credit. So 401ks are political footballs, and there's a perceived retirement savings crisis, which Congress has responded to by enacting certain tax credits to encourage small businesses to offer a 401k plan. So for example, under the Secure Act, there were two tax credits that were authorized. One is the startup tax credit, which is not available to a solopreneur or a self-employed person that establishes a solo 401k plan, because in order to be eligible to claim the startup tax credit, there needs to be non-owner, non-spouse employees working in the business, which of course, by definition, a solo 401k plan would not have such employees, because in order to be eligible for a solo 401k plan, you cannot have non-owner, non-spouse, full-time W-2 employees. But there's a second tax credit that was authorized under the Secure Act, which would be available to someone that sets up a solo 401k plan, as long as that plan includes an automatic participation feature, which our plan does. So setting up our plan will make the self-employed business eligible to claim up to $1,500 in solo 401k tax credits, $500 per year for 3 consecutive years. This tax credit is available for both new solo 401k plans, as well as existing plans that are upgraded to our plan that would then include that automatic participation feature. It's also noteworthy that the solo 401k tax credit, this automatic participation credit, unlike the startup cost credit, which is based on the actual cost to set up and maintain the plan, the solo 401k automatic participation credit of $1,500 is not based on the actual cost to set up and maintain the plan. So even though the value of the credit is greater than our fees, the individual is still going to be able to claim the full $1,500 in solo 401k tax credits, as long as they maintain the plan for 3 years. So you can see that there's an illustration, for example, for 2025, as long as the plan is set up or someone upgrades their plan here in 2025, they're going to be able to claim the credit for 3 consecutive years, 2025, 2026, and 2027. In terms of the impact to the cost, the net cost in the first year is $150. In the second year, the value of the credit actually exceeds our fees, because we charge $650, which includes the $525 establishment fee, plus the first $125 annual fee. So for the first year, your net cost would be $150. But in the second and third year, our fee is $125, but the credit is valued at $500. So your cost after the tax credit is actually negative by $375 in the second and third years. So it stated differently, the value of these credits will actually cover all of our fees for more than the first 7 years. It's also noteworthy that this is a tax credit, not a tax deduction. So with a tax deduction, one is able to reduce their taxable income upon which their tax liability is calculated. Whereas with a tax credit, one first determines their tax liability and then reduces that tax liability dollar for dollar. So in that way, a tax credit is much more valuable than a tax deduction. What are the eligibility requirements to claim the $500 credit? Again, you need to be eligible to set up a solo 401k and then either set up a new plan with the automatic contribution feature or upgrade an existing plan to include the feature. What is the automatic contribution feature? So in order to be eligible to claim the credit, the self-employed person needs to adopt a solo 401k plan that includes a default 3% contribution feature, which our plan documents provide for. However, the self-employed individual, as the participant, has the right to opt out of that default 3% contribution amount. And that's what the vast majority choose to do, because that then would allow them to make contributions in whichever schedule or amount they prefer, obviously subject to the limits and the deadlines. But exercising their right to opt out of the default 3% contribution amount doesn't mean that they no longer qualify for the credit, right? The plan simply needs to provide for the default amount, which it does. And the fact that the participant chooses to exercise their right to opt out of the default doesn't mean that the business no longer is eligible to claim the credit. In other words, you're not required to make annual solo 401k contributions to qualify for the tax credit. Again, if you have an existing plan, it can be upgraded to our plan to include the feature that makes the business eligible to claim the credit. How do I claim the credit? The credit is claimed by filing Form 8881. And as part of the onboarding process, we provide a link to a deep dive webinar we hosted with an IRS enrolled agent that goes through step by step the steps required to claim the credit. So a couple of quick examples. Lindsay is self-employed and has a solo 401k plan. She amends her plan to add an auto contribution feature before December 31st, 2025. She may claim a $500 tax credit for 2025 and then additional $500 tax credits for 2026 and 2027, as long as she continues to maintain the solo 401k plan with the auto contribution feature. Then we've also got Brad, who's a solo attorney with no employees working for him. He's therefore eligible to set up a solo 401k. So if he signs up for our solo 401k plan that includes the automatic contribution feature, and he signs up before the end of 2025, he will also be able to claim a $500 tax credit for 2025, and then additional $500 tax credits for 2026 and 2027, as long as he continues to maintain the solo 401k plan with the auto contribution feature. So that takes us to the end of the slides for today. Again, if you have questions or topics, whether on this topic or any other unrelated topics or off-topic issues, don't hesitate to chat those over, as we're happy to field those questions or comments. We also invite you to our community. We have a vibrant community of over 30,000 members. We have active forums. We have a library of videos and webinars. It's totally free to join. All are welcome. You can see our community at mysolo401k.net/my community. Also, feel free to email us at business@mysolo401k.net, and we'll get you access to the community. Again, if you found this to be helpful today, please like this video to help us to get the word out to others like you that might be interested in this topic. Please also subscribe, whether on LinkedIn or Instagram, YouTube, X, as we go live every day, and then you'll get notifications and you can jump on if there's an interesting topic or if you have a question that you want to go over. All right. Well, thank you so much, everyone. All the best. Until next time.